retirement and those things. We're used to transferring coverages from one carrier to the other, but I have to admit the transfer to Sanford was one of the most challenging ones we have, and I want to thank our members for helping in that and being patient with us in that transition, because there were some things that came up. Overall, we're talking about transferring 68,000 people here. Yes, there were issues that came up. We received calls. There were some things with prescription drugs. There were some things with pre-approvals or pre-authorizations, and other areas that came up. But I had dealt with those type of issues with Blue Cross Blue Shield, and of course when we switch, all of those come kind of at once, right. And we were able to work through those with the patients of our members, and of course there were some things with networks, sure, and things like that. So we did do now, as part of the renewal, one of the things the legislature did require of us in making that renewal was to go out and do a survey of our members to see what their levels of satisfaction were on the plan. And that's I think available on our website. It's a fairly long and detailed survey. But overall, I mean, it came back with just to the level of questionnaire satisfied was over 70%. Maybe went into some more detailed areas. It was up even higher.
Oh, sure. So you mentioned the PERS board. Who's on that board?
Yeah, the PERS board is composed of a cross section of members, and the membership to the board really reflects the membership of our system, because we have active employees, we have retired employees, we have political subdivisions. Of course, we have the state. Right? Keep in mind that the state of North Dakota is, like in our retirement plan, is about 50% of the participation. Our health insurance plan is about 52% of the participation. So there's a lot of others in there. But back to your question of who's on the board. Four of the members of our board are elected. One is elected by our retired membership, and they serve for 5 years, and there's another election. 3 of the members are elected from our active membership, and they can come from either the state employee side of our active membership or our political subdivision side of the membership. And so they represent those 2 aspects of our members. The board, in addition, has the chairman, who's appointed by the governor, who really kind of represents the state of North Dakota. The state health officer is on our board because of the significant responsibilities we have in the health area, and that's a very good member to have on. And so they also represent that, but they also represent the executive branch. We also have a member who's appointed by the Attorney General, because as you can imagine, with all of the things we do, there's an awful lot of legal considerations to that. While we have our own attorney, it's good to have somebody in a fiduciary responsibility with a legal perspective as well. And so we really have those 3 members that represent the executive branch of state government, which is our largest client, like I said, 50 or 52%, depending upon the program. And then we have 2 members that represent the legislative branch, which of course is responsible for setting the statutes and funding all the programs, and they came on this last session. So we have 2 members there. So as you look at the overall board right now, it's 9 members. 5 really represent the executive and legislative branches of state government, which are a majority, and 4 represent the membership. And so it's a pretty broad cross-section of people that come together to share their thoughts on how these programs should go forward and serve not only our employers but our members as well.
Right, and the reason I asked that question about the board is that I've heard, we've had discussions about this, but I've heard you also testify to this, that there seems to be a perception out there that we're just talking about state employees that are part of this, but there are a significant number of other political subdivisions, of course, employees that work for them, but a significant number of those happen to work in the field of education as well.
Well, interestingly, our second largest client in the retirement area is school districts. Yeah. And of course, as you know, we don't do the teaching staff. That's done by TFFR, our Teachers Fund for Retirement, which is under a separate board than us. Sure. But political subdivisions are not required to be in PERS, but they elect to be in PERS.
Right.
And counties, our third largest client, all counties are in the PERS system, and then you look to the larger cities in the state, Fargo and Grand Forks, they're both in the PERS system.
Right.
So we have a pretty broad cross-section of interest there, so it's not just, it's just not the state needs we have to be aware of, but we have to be aware of the needs of our political subdivision people as well, because their participation is important, and quite honestly, you know, if we didn't meet their needs, they can terminate participation in our plan at any time and leave.
Yeah.
Well, the PERS board question that Nick brought up also leads us to something happening this session, just before crossover. Representative Carlson introduced an 80-plus page amendment which would dissolve the PERS board and replace it with an advisory board, and a lot more than that. I guess the governor would appoint a director, so a new state agency, I guess. Tell us about this amendment and where we stand now after crossover on this massive bill, which is your appropriations bill, House Bill 1023.
Yeah, that did, was introduced just prior to as an amendment to our appropriations bill, just prior to crossover. And so it has moved over to the Senate. There was a hearing on it right now. It's still under consideration on the Senate side. But as you look at the bill, some of the most significant things it does is, yes, it changes the governance of PERS. And as we were talking about earlier, the governance of PERS right now is reflective of the cross-section of membership. And of course, the governor, through the people he appoints, is on the board. The legislature is on the board, and our membership is on the board. Now, all of these people are what we call fiduciaries of the plan. And that's it's a legal term, but it is an important thing to be aware of if you're a member. And as a fiduciary, you're required to act in the best interest of the plan, and solely in the best interest of the plan. And of course, there's some variance as to what we all think is the best interest, but your primary motivation behind that has to be you're acting in that best interest. Now, with that, if we move over to what we call a single fiduciary, which would be when all of this is moved underneath the governor would become the single fiduciary. So you don't have this broad input of fiduciary perspectives, but you just have one person being fiduciary of the plan, making the decisions of the plan. But then there's also some, as we brought out some of our testimony, some concerns there that, the governor has a responsibility to the citizens of North Dakota in general, because that's who elects the governor. Now, at all times, the interests of the broad population may not be consistent with the interests of the funds.
Sure.
And let me give you an example. I mean, and this isn't anything that's come up in North Dakota or relates directly to this discussion, but it's illustrative of what could come up. I mean, in some states, for example, on investing, they have provisions that they maybe put in state requirements. Say, we should invest 10% of the retirement funds in state, or whatever the percentage is. Now, as you look at it from a broad cross-section of the state, that might be a good idea, that those monies are coming in and going. But as you look at from the plan's perspective, I mean, we're supposed to invest those monies to the highest and best use so that we can get the highest return. So as we look at the array of investment opportunities, it's nationwide, it's international actually, global, to find out where that can be invested to get the best return. As you look at limiting that, your perspective becomes narrower and your choice of options become narrow, and you may not be getting the full list. And that carries over in other areas. There's things states have purchasing requirements in state. There's other things in which these two objectives may not be consistent with each other. And for someone like the governor, then how do you balance that? I mean, as a fiduciary, you're obligated to act one way, and you're exposed to lawsuits incidentally. If it's fiduciary, you don't. By us as the membership. And the other side, you have to look after the interests of the state. So that's a hard thing to do, especially when you're the single person
Right.
responsible.
And an advisory board has less
Well,
power,
as an
obviously.
advisory board, I mean, they really, I mean, it's, they just advise, I mean, I don't want to just say just, but I mean,
Right.
from a strict legal standpoint, I mean, and right now, the board is the decision maker.
Right.
And they are responsible as a collective body for doing these things. They hold that fiduciary responsibility. They're held to that same standard that I was talking about for the governor. But when you go from a board to a single fiduciary, these things just present some issues.
Right, and when I testified after you did, it was basically, my first line of my testimony was that I wanted to associate myself with your remarks. But that was one of our major concerns with that, is that the governor will be put in a rather untenable position if he has by law to keep both the state of North Dakota's interests and the fund's interests at paramount. I mean, he has to make sure that it's true to both of those. And the conflict arises where he can't be, he's automatically going to be in violation of one of his major responsibilities. I do note that Representative Carlson, who introduced this bill and testified in favor of it, he was mindful of that and said that he would prepare amendments to take care of that issue. I haven't seen them yet. I don't even know if they've been introduced. But as you say, that bill happens to have been heard in the Senate, and now they are working it up, I'm sure. My understanding, of course, is that they're going to strip away the amendments and turn it back into a funding bill and get that over to the Senate approps, and it'll be acted on there. And then, of course, the conference committee will come and we'll see what happens then.
And another thing that's interesting about the bill is that right now, as you mentioned, our board structure provides for input from the legislature, it provides for input from the executive branch and from the membership. As we move to the single member and we have the advisory board, it's interesting to note that the membership won't be as involved as they were. But ironically, the legislative
Takes
input
away.
is diminished as well. The legislature doesn't have as strong a participation in the governance. They are, through their two members, actively involved in governance, and that would go away.
And one from
So-
each chamber.
Yes.
And
yes.
one from each party.
Yep. And
Yeah,
so
right now.
that would be diminished.
And
as well.
frankly, Senator Dever, who serves on the PERS board, spoke against those amendments that were introduced by the Speaker Carlson, or I'm sorry, Majority Leader Carlson, and for good reason. He spoke very highly of the board, the professionalism, the idea that the board has been acting all along in the best interest of the fund and is doing outstanding work, and he urged that they would be stripped away as well. So that's the good thing.
Well, last week too, Sparb, not to jump on you, a delayed bill was offered to talk about PERS a little bit more. Again, Representative Carlson has jumped in on this, and now he's talking about, and we'll let you explain this, I guess, but fully insured versus self-insured in terms of how PERS would operate for members and health insurance.
Yep. Well, first of all, let's start from the member perspective.
Sure.
From the member perspective, whether we're fully insured or self-insured, doesn't really have a lot of effect on the member. I mean, the benefits can be the same underneath the fully insured plan as they are underneath the self-insured plan. The way the services are delivered can be the same. So, this is an issue that kind of takes you one step back from the membership as to how the program is funded. Now, PERS has been under both methodologies. It's been both fully insured and it's been self-insured. It was self-insured in the 80s, and we were putting together some information on that and took a look back at the rates of increase underneath the two. And, quite honestly, I mean, the rates under the self-insured plan have gone up a little bit less, but close to what they have underneath the fully insured plan. So, there's a lot of other things contribute to it, but we don't see any particular advantage in that from the rate side of it. What you really boil down into this, and where this conversation becomes a little more complicated, is with the state of North Dakota. Because for most employers, and actually for a lot of governmental employers, as I talk to others in other states, I mean, their decision is, do we want to be fully insured or do we want to be self-insured? It's an either or.
Right.
One or the other, you pick. Well, one of the things PERS did back in '89 is working with Blue Cross Blue Shield, we came up with a model contract that I'm not familiar that anyone else is. And what it is in between, it's a hybrid contract. And what we do is we incorporate the benefits in that contract, take all of the benefits that we're able to from being a fully insured plan and have that in our contract. And we looked over and we said, what are the benefits of being self-insured? And we took those things and we put them in the hybrid contract. So, it's not a choice now between fully insured or self-insured, but it's fully insured, self-insured, or this in-between contract that we have, so.
Which basically combines the best of both of those worlds.
Which combines the best.
Yeah.
At a high level, I mean, one of the reasons why you want to be fully insured is that if there's a loss, you as an employer, that's all that loss is passed on to the insurance company. Why you want to be self-insured is that, you don't always take a loss, you get gain sometimes.
Yep.
And if you're fully insured, the carrier keeps the gain. If you're self-insured, if you get a gain, you get to keep it. But if you take a loss, you got to pay for it.
Right.
You can buy some insurances for that, but you essentially, have to provide for that. Well, our plan, this is why it's a hybrid. Right now, we're shielded from the loss. And incidentally, this biennium, Sanford has taken substantial losses in this plan, which we are capped out at $3 million. After that, their losses are projected to be in the 40s or $50 million range. We're insured through this modified, that doesn't come back. That doesn't have to be extra money appropriated. I mean, the legislature has a big enough challenge without having to appropriate more money or do things to help offset that. And so we've got that advantage. But, when we're getting gains, there's been discussions about the PERS reserves. Well, what are these reserves? They're refunds we've got. And of course, right now we have about $35 million in refunds that we've gotten as a result of this gain. And this biennium, what was talked about in Governor Dalrymple's budget was to fund the health insurance plan was a three-way funding point. One was the state was going to put in about 60% of the increase. Employees were going to share in the cost by about 30% of the increase coming in through plan design changes. And then about the remaining part was to come from the PERS refunds that were there to help buy it out. So the package came together with PERS putting in about half of its refunds, employees doing some, and the employer doing some. So, the average increase now really for the 2-year period is probably right around 5% each year, which is
very reasonable.
Very, very, yeah. As you look around, that's a pretty pretty low. But part of that is because we have this hybrid plan, and we might be able to get these underneath the fully insured or under the self-insured plan. But there you have to maintain reserves for other cash flow things, which we don't have to worry about. So it's as you talk about, it's not just fully insured, self-insured. It's fully insured, self-insured. The PERS guy.
Right.
But if, theoretically, we were self-insured as a state right now, we'd be looking at having to come up with some $40 million.
Well, it's hard to say. It's hard to say how much because we would go out. We would have had some stop loss insurance and some aggregate insurance, which if designed right, would help to offset parts of that. But until you go to market and find out how much these things cost. I can tell you last time when we looked at stop loss on what they call an individual basis, if I recall correctly, and that's if you can buy it at several levels. But if you buy it at about $1 million level, I think, which means once somebody incurs more than $1 million worth of claims, it will pass on. That was still millions of dollars to purchase just the coverage. And then if you go down to $750,000 or $500,000, those costs start going up substantially at those. So you can buy some of those. But yes, we're right now we have. That's all take care of. And then interestingly, this next biennium with Sanford and the renewal, we've negotiated that they will be responsible for everything above premium. Right now, we share 50-50 in the first 6. That's where the $3 million loss comes, but that's gone now in the new contract. And of course, since they're taking losses, we ask them to increase their reserves to make sure that they have But they have a good commitment to the plan, and they've agreed to put $30 million more into to reserves. And so you with an outside vendor, I wouldn't want to have to go to the legislature and ask for, you know, $30 million more in commitment to the plan, whereas with an outside vendor, the board was able to do that, and they were able to accommodate.
Well, it's hard enough to go to the legislature and ask for $30, so imagine the response you'd get for $30 million. Exactly. So this bill is going to get a hearing, was it tomorrow?
Tomorrow
Yes.
at 2
Tomorrow,
o'clock,
2 o'clock.
yeah.
And so we'll be there. I haven't exactly studied up on it. I don't know if have you seen the bill?
Yes.
And you have? Okay, so we'll make sure that we have got it, a good reading of it, and we look forward to hearing the case for and the case against. So anyway, that's tomorrow.
Yeah, 24 days, I think, we have left to get to that magical number of 70 to end early, so PERS will certainly carry a heavy load of interest among NDU
Again,
members in the state coming down.
We will, but, you know, some of the things that are being brought forward here, I mean, fully insured, self-insured, I mean, those are good topics to discuss and talk
Yeah,
about
exactly.
and understand, you know, how governance should work. I mean, that should be reviewed every so often and taken a look at. All of these things are things that can be taken a look at. The dilemma when it is in the short period of time that there is, and you know, the legislature has set up, you know, for PERS and for TFR, because our programs are so complicated and our membership is so diverse, they have set up a process where we have a special oversight committee, which is a legislative employee benefits committee. And complicated bills like that affect these are to be submitted to that committee, usually by April before the legislative session, so that these complicated topics can be thoroughly examined, because, you know, with the health insurance, I mean, you don't want to have a major overlook and find out about it afterwards, because there's just challenges there. I mean, one of the things in one of the bills assumes that we would move to a January start date with the insurance, and provides that we would transition to with Sanford, extend their contract. Well, you know, they don't extend it. You know, one of the questions we're raising is there's no provision for us to, what do we do?
Right.
We may not, you know, there needs to be additional legal guidance, because if they didn't extend, we'd have to go through a full bid process under the statute. We don't have the authority to do anything else. We couldn't get that done by July, so it could create an untenable situation where we don't have health insurance.
Right.
And so you don't want to have those types of things overlooked. You want to have time and careful study to make sure that the unintended doesn't happen.
Right, and that the committee you referenced, the Public Employees Benefits Committee, they meet at the call of the chair. I know it was mentioned earlier that they only meet quarterly, but the chair can call a meeting whenever, right?
Yes, there's some bienniums where there's been studies where the committee has met much more regularly. This biennium, there wasn't many bills submitted, so they didn't have to meet as.
And that is one of the things we brought up too in our testimony on the previous bill we were discussing, is that that committee didn't even get a chance to look at that. And you're right, these are very large bills that affect an awful lot of people in every community and every corner across the state. And they really do deserve that time. They deserve an open and public hearing with the best information possible. One of the things that at the end of last session, you'll remember, that was a PERS bill too, that kept everybody here till the wee hours and before sine die, and we were kind of hoping to avoid that. I guess we'll see what happens with these bills in there tomorrow.
Yeah. Well, you know, as you look at the people, there's about 68,000 people in our health insurance plan. You know, that's a pretty significant group of people that we need to make sure we do things right for.
Yeah.
And in our retirement programs, you know, it's state political subdivisions. We've got about 9,000 to 10,000 people that are retired on the program who rely upon our service and our ability to do that, and us performing consistently. So again, that's an area we have to be careful that we continue to do everything right. And we have about 20,000 active members and about 10,000 deferred, so that's another 30,000. So we're talking about, you know, not just the 34 people that are over at our office.
Sure.
You know, we've probably get our hands around that collection. But it's pretty big in terms of all, and
Yeah.
that's only those two programs. I mean, you start
Right.
getting into our supplemental savings plans, our dental, our vision, I mean, there's thousands of people
Sure.
there too.
I have one more question for you, and it involves this bill that we talked about with the 85 pages of amendments. That's a funding bill, that's the PERS funding bill. As I mentioned, I believe what will happen is they'll strip those amendments out, send it to the appropriations, where it'll be acted upon there, then it goes to committee. If they're not able to resolve this in the time that we have left in this legislative session, and then the legislature ends, how does that affect your ability to carry out your duties in your office's duties?
Well, if there's no
No resolution. on this.
resolution on some of the issues, then the existing statutes and provisions will remain in effect.
So our members can expect that there will be no interruption in their service or their,
Actually, if there was nothing that happened here, the status quo would stay in effect.
okay. And we know that because you got an Attorney General's opinion on that.
Right.
Yeah, so,
Well-
And you know, the statutory changes that are proposed there, since there would be, if Woodens wasn't adopted, then the existing statutes stay in place.
sure. Great.
Good to hear.
Yeah.
It's reassuring.
It is.
Well, PERS Executive Director Sparb Collins, thank you for joining us and taking the time to get our members up to speed. We really appreciate it. And for Nick and me and Sparb, have a great rest of your Monday and catch up on that hour of sleep.
Yeah,
that
go to
you
bed
lost
early.
last
Yeah.
night.
Bye-bye.
Thank you.
Excellent.